There are mornings when the SPY moves before the news arrives. The number drops at 8:30, the headline hits your screen, and the chart already turned 3 minutes ago. You sit there feeling slow, like everyone got a memo you did not. And the story you have been told by every channel and every textbook is that price reacts to information. Inflation, earnings, rates, war. That story is not wrong. It is just nowhere near the whole thing, because there are also days when the news is enormous and the SPY barely flinches, and days when nothing happens at all and it rips 2% for no reason anyone can name. So what is actually moving it? Underneath every tick, every candle, every spike, there is a system almost nobody watching the chart can see: a machine. And here is the part that took me an embarrassingly long time to understand. The machine does not predict the market, it reacts to it, and in the act of reacting, it moves everything. My name is ST, and I spend way too much time trying to make sense of the market. If you have ever watched the SPY do something that made no sense, checked the news, found nothing, and felt like the floor was tilted in a direction you could not measure, subscribe and stick around. Because by the end of this, you are going to look at that flat little chart very differently. Start with the illusion. The SPY looks simple. A line, buyers and sellers, price discovery like they taught you. But that is only the skin over the thing. Underneath, the SPY is not one market. It is a web of thousands of positions, all touching at once. Every call, every put, every strike, every expiration, all happening live, all at the same time. Most people look at the SPY as a direction problem, up or down, green or red. The real system is not directional. It is structural. Because for every option somebody buys, somebody has to take the other side. And that other side is not a gambler with an opinion, it is a market maker, a dealer, a firm whose job is the exact opposite of yours. You are trying to be right about direction. They are trying to have no opinion about direction at all. They want to be neutral. And staying neutral is what moves the whole index. Here is how. When you buy a SPY call, you are not just placing a bet. You are creating a risk that somebody else now has to carry, usually a dealer. And the dealer does not want it. So they hedge, they sold you a call, so they are short the upside. They go buy SPY shares to cover. If the crowd sells calls instead, they buy those calls and sell shares against them. Now multiply that by millions of contracts. You get a loop. Price moves, so the hedge has to adjust. The adjustment is itself buying and selling. So price moves again, so the hedge adjusts again. They call this first layer delta hedging. On its own, it is fairly tame. But delta is not fixed. Delta changes as the price moves, and the speed of that change is where the calm auction turns into a machine with a temper. That speed has a name, gamma. Slow down here, because this is the whole thing. Gamma is not direction, it is not even speed, it is acceleration. It measures how fast the dealers have to change their hedge as the SPY moves. There's a number people track for it, gamma exposure, and its sign tells you which machine you are standing inside. When dealers are long gamma, the reading is positive. They are a stabilizing force. They sell into every rally and buy into every dip automatically just to stay neutral. That is the glassy, boring market. The SPY grinds 0.5% and nothing feels alive. But when they flip to short gamma, the sign goes negative and the behavior inverts. Now, to stay hedged, they have to buy as price rises and sell as price falls. They are pouring gasoline on whatever the market is already doing. The price where it crosses from one world to the other even has a name, the gamma flip. Above it, calm. Below it, the same news, the same size order, makes a move 2 or 3 times bigger. Nothing about the company's changed. The wiring underneath changed, and once you see that, the option chain stops looking like data. It starts looking like a control panel. Every strike with heavy open interest is a place where hedging is concentrated. When the SPY drifts toward 1, the dealers have to adjust there, and that adjustment pushes on the actual index. Traders look at those levels and call them support, resistance, pivots, drawing their little lines. They are not wrong that the levels matter. They are wrong about why. Those are not lines drawn by sentiment. They are hedging thresholds. It is why the SPY stalls dead at one level, knifes clean through another, and then, on a big expiration afternoon, gets pinned to a round number like a magnet found it. Not because traders agreed on a fair price, because that is where the positioning had to settle. Now here is what changed everything. For decades, options were slow. You bought something weeks out. The decay was gradual. The hedging was gradual. The machine turned slowly. Then came same-day options. 0 days to expiration, 0 DTE, and the numbers are hard to believe. In 2025, contracts that expire that same day made up around 59% of all the volume in S&P 500 options, about 2.3 million contracts a day. Across the entire US options market, 0 DTE went from about 21.5% of volume in 2024 to over 24% in 2025. And because they expire in hours, their gamma is monstrous, 2 to 5 times a comparable weekly. So the loop that used to take weeks got compressed into a single session. Exposure builds in the morning. It is gone by the close. Small moves force fast hedging. Fast hedging makes bigger moves. Bigger moves pull in more positioning. And the whole thing breathes in and out inside one day. That is why the SPY can sit calm for hours and then convulse in 15 minutes. The machine did not get smarter. It got faster. And now I have to be honest with you because the easy version of this video is a conspiracy, and the truth is more interesting than that. Nobody is hiding any of this. The gamma data is sold openly. The option chain is public. And when you read the careful research, including Cboe's own work, it does not say dealers secretly run the market. It says something quieter. There is no good evidence dealer positioning has grown outsized compared to everyone else. And 0 DTE does not even reliably raise the average volatility of the market. What it does is reshape it. It concentrates all that convexity into the hours of one day. So the effect shows up as pinning near key strikes, as sudden air pockets when flow gets one-sided and liquidity gets thin, as a market that is mostly calmer than it used to be, and then occasionally much sharper. The machine is real. It is just not a villain. It is a structure, and structures do not scheme. They only react. So let me say your objection out loud, because you are already forming it. If dealers are buying and selling the SPY just to stay neutral, then is the price even real? Is the whole thing fake, a puppet on hedging strings? The honest answer is no. And that is the unsettling part. The hedging is not an opinion forced on you. It is a mirror. The dealers are reacting to what traders and funds, and you already did. The machine has no view on whether stocks should go up. It is the most agnostic participant in the entire market. It does not care about earnings or inflation or who is president. It cares about one thing: staying balanced against the bets everyone else already placed. So when the SPY moves before the news, it is not because the machine knew. It is because positioning shifted. And the machine faithfully, mechanically moved to stay neutral. And that motion was the move you saw, which loops right back to that morning where you felt slow. The SPY is sold to you as the simplest thing in the market: the index, the economy in one ticker. In practice, it behaves less like a basket of 500 companies and more like the output screen of a giant machine that is constantly rebalancing itself against everyone trading it. News still matters. Earnings still matter. The economy still matters. But all of it flows through this second system first, the one built out of options and hedging and gamma. And that system does not just respond to the SPY, it moves it. So the question that actually predicts the next move is not the one everybody asks. It is not what will the SPY do. The SPY does not decide anything. The real question is, what is the machine positioned for? Where is the gamma flip? Where is the pin? Which way will the hedging have to lean? Most traders spend their whole lives watching the price. The machine is not watching the price. It is watching the positioning. And the SPY, the line you stare at all day, the thing you thought you were trading, is just the output.